Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in our next guest. It's going to be Megan Brantley. She's the VP of Research at Likefolio. Welcome back to the show, Megan.
Thanks for having me, guys.
All right, so we're talking Google Alphabet. Now, I kind of wanted to pivot to this name today just because I think it's getting a nice pop here. The previous administration kind of coming down hard on a lot of the big tech companies, especially Google Alphabet here. But when you guys look at the data, the earnings were pretty good. It's been underperforming. It's the lowest valuation out of the Mag 7. I mean, do you guys have good data on Google Alphabet where it's maybe not losing market share and advertising dollars?
So we have a bit of a mixed bag whenever we look at Google, both in terms of what's driving its growth, and also whenever we dive into those ad dollars, which sectors are performing well, which sectors aren't performing well. And so I think we'll start with the best news for Google, at least in our data, is we see it making continued traction when it comes to its cloud business. Whenever we look at Google versus Amazon versus Microsoft, we have the highest growth rates from Google's cloud when it comes to digital traffic and consumer interest. We have those figures up by about 13% year over year last month. So I think that this is a good sign for Google moving ahead, that it's taking a larger chunk of this overall cloud market that we do see continuing to rise across the board. Now, I think whenever you look at advertising, that's where things get a little bit trickier, because we do see a lot of strength, particularly in its YouTube banner. And we saw that whenever Alphabet reported earnings just last week. But we're starting to see some underperformance when it comes to search and just its traditional, Google Ads platform. And I think that a lot of this is an indicative of a slowdown in growth for us. So we're starting to see growth slow there. We're starting to see ad dollars flow into second-tier platforms, whether you look at names like a Reddit, whether you look at names like Snapchat, or even if you look at streaming names and streaming platforms like a Trade Desk or like a Netflix. And so I think that this, for us, particularly today, this move could be a little bit of a buy the rumor, sell the news. And there certainly is a lot of investor optimism heading in with the new administration that's set to take office. But for us, when we look at this, I would say our data tilts a bit bullish because of the cloud overperformance that we're noting. But we are a little bit cautious just because we are seeing rising competition in the search for ad dollars.
Yeah, Megan, Google Cloud growing by 35% a year. And, it's easy to take for granted Google Alphabet, right? Because their name, Google, is kind of a verb. It's got its own, we know what it means to Google something. It's so incredibly used that sometimes it almost gets taken for granted. It's the cheapest valuation of the Magnificent Seven, despite being in all the key areas. Is it in cloud? Yes, it is. One of the faster growing areas of cloud. Is it in full self-driving? Waymo is now worth $45 billion. Go out to the West Coast, the Waymo cars are everywhere. YouTube, ad dollars, they're on the cusp of that. All these things that they're doing, all of their businesses, their main businesses, puts them right in the epicenter of all the things that are moving in this economy. And oh, by the way, they've got a pristine, massive balance sheet with $110 billion in cash. So they've got flexibility as well, Megan. But why does this name, in your opinion, and in Likefolio's data, why does it get a bad name? Why is it taken for granted?
I think that for us, when we look at this, at least from the consumer perspective, we do see some early signs of shifts in consumer behavior for how they are seeking out and finding new information, which is the bread and butter, which is the Google, the verb, like you talked about. While its YouTube banner is doing tremendously, while its cloud banner is doing tremendously, we see signs that especially younger consumers are going and maybe they're searching for information on social media. Maybe they're using ChatGPT to find information, and this weakens its overall ad prospects. And so I think that this is something that Google or Alphabet needs to address for sure. But I would say that of all of the areas that we have insight into in terms of the consumer's mind and the consumer's behavior, that's the first sign of a bit of a shift that we see, especially in where consumers are turning to, which platforms they feel like they can trust. We're starting to see a little bit of that shake out in a negative way for Google. So not major flashing warning signs. I'm not coming on here saying, we're very bearish Google, but those are the areas of weakness that we see emerging in the overall Alphabet narrative.
Megan, when you guys look at some of your data, whether it's YouTube doing pretty well, some of the other segments are still doing well. Search, they still have 90% of the market share in there. Bing's not making any inroads. ChatGPT, who knows if that'll change the course of search at this point. But when you look at this company, and Kevin mentioned a bunch of the fundamentals, a solid balance sheet and stuff, do you guys have still a decent score on this? I mean, the stock's up 25% this year, so it's had a good run, but it's lagging some of its peers.
I would say that we would be cautiously bullish, mostly on that cloud strength, but also noting that it is getting a bit of a boost today. And, especially if this runs up a bit higher, we'd start to go into neutral territory. This looks to be, for us, priced about right, maybe a little bit more room from upside from here, just in the very near term.
All right, great breakdown of the data and the information. Appreciate it, Megan.